All right. Well, good afternoon, everyone. This is Scott Thompson, and we are here for Stock Investing for Beginners. Excited to be here with you today. Thank you for taking some time out of your busy schedule to join me today. Hello to Eva and Will and Simone and Jay Richardson and Robert and I think Scott Lux here, Jay Richardson, Gary, everybody that's joining us. Appreciate you taking some time to see me today. One of the things that drove me crazy when I started investing was I always felt like I was missing my entry opportunity. So I'm going to share some techniques today with you. We've covered some of this before, but the big takeaway today is to learn and understand what the setup is. So we'll come back and visit that. But before we go, just a couple housekeeping items again. Be kind there in the chat to everybody. Give a shout out to Barb, who's in the chat helping us out. And if you have some questions, you can post them there in the chat and we'll try to respond to those as much as we can. If I can't get to a question during the session, then I will look through all the chats and we'll post some answers in the YouTube comments on the recording as well. But if you would, please subscribe to our channel. Give us a thumbs up on a like. That's like a applause for us here if you find this useful. And of course, you can follow Barb and me on x.com at Scott Thompson CS or Barb Armstrong CS. I appreciate you doing that. So before we get going, remind everybody that our presentation today is for informational purposes only. The strategies and the techniques that we're using aren't meant to be recommendations, and the stocks that we look at are just for example purposes only. We'll be using the Paper Money software platform. That's a little bit different than the live platform. There's some significant differences in how orders are filled, things like that, but it is a great learning environment on the Paper Money, and we're using that here today. We talk about stop losses all the time. There's no guarantee that the execution of a stop order will be at or near the stop price, and also be aware that any investing involves risk, including the loss of principal, and past performance is no guarantee of future results. So let me go ahead and jump in here. What I want to do is go back and take a look at one of our previous examples here. The technique, I'm right at the beginning, I mentioned that, one of the frustrating things for me was I had a watch list of stocks. I was doing my daily routine. I was looking at those stocks, but I always felt like I should have bought that yesterday. I should have bought that a few days ago. And what it came down to is I was always looking for the buy signal instead of the setup. Now, write this down in your notes, all right? The setup is what the stock looks like just before you get your entry signal. So, like a real life comparison for this is like if you're sitting at a red light, yeah, everybody's done this, right? We're sitting at the red light, we're in the front of the line, and we're wondering when our light's going to turn green. And so we usually check out of the corner of our eye, right? We'll look left, look right, see if we can see that on or that cross traffic signal light. And if that turns yellow, we get a little bit excited about that because we know something good's going to happen on our light. Our light is going to turn green here pretty quick. And that's the idea behind the setup is we're getting ready to take action. And then when we get the green light, when we get whatever our buy signal is, we're ready to take action. Maybe we're already in the trade. And I want to show you that today. But again, one of the big takeaways in your notes, put the setup is what the stock looks like before you get your buy signal. And basically every buy signal will have a setup. Our two green arrow signal, which is a really simple signal to see on the chart. The setup for that obviously is that the green line or the moving average is rising and the MACD is red, but it's starting, those little histogram bars are getting smaller and smaller and it's getting closer and closer to that zero line. That would be the setup for our two green arrow trade. Now, what I want to talk about here is have a little bit of a quiz with you, with those of you that are here. I want some answers just to make sure I can hear that or see if we're in a live class. I can look into your eyes and see that you understand. But the only way to do that here in our live session is to have you chat something in. So what I want you to do is right now, what is the definition of an uptrend? So, chat that in. You can use abbreviations and everything, but I want to have you give me that definition here as we go, because in the uptrend, it's interesting to me. Like recently, I think today we made an intraday high on the NASDAQ. Yesterday, I think we made an intraday high on the S&P 500. But as the market slows down a little bit, people tend to freak out a little and think, oh, the market's going to tank or it's going to crash. But if we remember the definition of an uptrend, and you guys are chatting that in, it's a higher high and the higher low, right? Now, what does that really mean, though? It's a higher high price and a higher low price. So I've got a line chart that I just drew here on my Qualcomm example. And let's just draw like a last candle in here. And that just vertical line is that last candle. That's our new high. And so, in order to make a higher low, what has to happen? Well, the market has to, the price action has to go down a little bit, right? We're not going to go up, 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 up every single day. And so, what we look for in a setup for a bullish bounce. Now, these are all kind of technical terms here, but it's important to get these different things. And I'm going to write these in the scratch pad over here after I go through this little example. But in order to have higher highs and higher lows, we have to be able to identify kind of where the last low was. Let's put a low over here. And then as the stock starts to come down, now we can say, well, we have a high. And how do we know if that's a higher high or not? Well, if we kind of go continue on here, if my last high was here, then I can visually see that the current high that we have is higher than that, right? So we would call that a higher high in the trend. And one of the really cool things about technical analysis and trend analysis is being able to know before what has to happen for this trend to continue. So if my last low is down at this level, let's just call this 100 for fun. In order for this trend to continue, where does the next low have to be? Pause for your answers here. For the trend to continue, the next low just has to be above 100, right? That's technically the definition of a higher low. Now, for those of you that have been around a little bit and watched some of Barb's Getting Started with Technical Analysis webcast, and you've watched some of her candle webcasts, which she can probably drop a little note there into, or a link for her trading management mini series playlist. A lot of great stuff in there. She's got trading plans. She's got about 13 little short videos on candle patterns, which are a lot of fun. But go watch that. But, as we trend, one of the questions that comes up often is, well, how much should that stock pull back in a good strong uptrend? What is a normal type of pullback, or what is a normal type of retracement, or what is a normal type of decline in the price? And there's lots of different answers for this, but one of the things that most technicians would like to see is they would like to see the old high remain as the new support. Does that make sense? So when we see the stock make a higher high in the trend, we start to watch it pull back. And as it starts to pull back, that should be a signal for us to start getting ready. If you're going to run a race, you kind of walk around the block, then you get down in your, the little squat, you put your feet in the braces or whatever those things are called. You put your hands on the line and you're getting ready, right? As the market pulls back, this is what we're trying to do, is get ready for that opportunity to buy. All right. And so, as the market pulls back, we're watching it come down. And really, the question that we're asking ourselves is the current low, and I'll draw a little arrow there. Okay, is the current low, is that higher than my last low? And if it is, then my trend is intact. Okay. And so I wanted to go through that a little bit here because I wanted to, get rid of my drawing tools here for a second. And I want to write down these things in the setup. Now, a bull flag setup, a bull flag is a bullish price pattern. It's that up and down motion in an uptrend, that short-term motion As the stock rallies and makes the new high, pulls back for a few days, and then makes a higher low, there's things that we want to get ready for. And so I'm going to write these over here on my scratch pad. So the very first thing of a bull flag setup is a higher high. Okay, that's a higher high in price. Then we're going to watch for the stock to pull back. Now, ideally, we're looking for about a 3 to 5 day pullback. So I'm going to write 3 to 5 days. And pullback just means the price is starting to go down a little bit. We're getting lower closes each day, usually lower intraday lows and lower intraday lows each day. So we're looking for about a 3 to 5 day pullback. We see the stock getting down near support. Okay, and this is a little bit more subjective here. I'm going to just type in near support. And the fourth setup criteria is that we're still making, like today's low is still higher than yesterday's or the last low in the trend. Okay, so I'm going to just type in higher low, right? All right, so let me just see if there's any questions here. We do have a survey today, so I know a few of you were waiting for a survey to make a comment on some of the classes that we had on Monday. We had a new webcast there, so if you want to make a comment on that, go ahead. I'll see that. But please fill that out. It's just a couple questions real quick. And then, I'll also be able to enhance what we're doing in this webcast for things, as long as we're within the context of stock investing for beginners. But tell me what you'd like to hear more about, learn more about, and if you have some other ideas, we have 30 different webcasts, and I help manage what we teach. So let me know what you want to hear. All right. Let's see. I don't see any other questions in there. So uh, go ahead and chat those in if you have them. Now, what I want to do is go through what I did with Qualcomm. Now, we did this a couple weeks ago. Today, the stock's up 3.81%. It was up $9. And we looked at it first on this breakout. We bought a couple shares here on this breakout. And by the way, a breakout setup is when the stock is trading near resistance. That would be the setup for a breakout entry. Then the stock went up and made a new high in the trend. Now, I'm going to kind of do some little circles here on the chart just for fun, or actually little squares. So I like to draw like little gray boxes at my highs and lows, because then I can visually see kind of where the next highs and lows are. So as the stock was going up, we went 1, 2, 3, 4, 5 days, and we got a new high in the trend. Now, those of you that have watched Barb's candle theory class, or those little short videos on candles, and we have some YouTube shorts on candles as well, what kind of candle pattern is that there at the top? Change back to my arrow, but this candle right here, it has a small body and a long shadow or wick, and it's at the top of an uptrend. And we didn't know it at the time, but we could have said, well, that looks a little bit like a shooting star is the name of it, and it's a bearish reversal candle pattern. And when we see that, we again should be getting ready. Okay, it doesn't happen 100% of the time, but we should be getting ready for the stock to pull back a little bit. Okay, and that's what happened. The next day, we got this huge down day. Okay, and then we got another interesting candle pattern right here. So I'm going to, over here on our setup, another thing that kind of people look for when that stock is near support is a bullish candle pattern. And there's a whole bunch of them, but we'll go through a couple of them here today. Okay, so here's the stock. We made a new high. So as we go through our little checklist, do we have a higher high? Check. Okay, here's day one, here's day two. We don't have a 3 to 5 day pullback, ideally, but we have two. And the question is are we near support, and do we have a bullish candle pattern, and are we making a higher low? So let's kind of go through a little bit of check marks here. If this is now one of the things that people mistakenly say about technical analysis is that it predicts the future. It does not do that. Okay. What it does is it helps us be ready for and be able to identify trends and support and resistance levels. All right. But if we go through our setup over here, the bull flag setup, again, a bull flag is a bullish price pattern. It's in the context of an uptrend. And so as the stock's making a higher high, check, we've got that on Qualcomm. 3 to 5 day pullback. Well, maybe not. We only have 2 days, but could we start getting ready? 2 days. You ever done that sitting at the stoplight? You think, oh, that light should change here pretty quick. And then it doesn't. You see the blinking thing go down to zero and it looks like it takes 5 seconds or more for it to change from red to yet green or whatever. So sometimes we're only going to get a 2 day pullback. Sometimes we might see a 7 day pullback. Okay. The critical parts really are here: higher high and higher low. What happens kind of in the middle? That's not maybe as important. But what we did, and this is when we were in class, we identified this little candle setup here as a short-term bull flag, and we actually set an order to buy this stock if it traded above the high of that day. Okay. So this candle pattern here on the right, so those of you that have watched Barb's candle patterns webcast, that's going to be called a bullish harami. Okay, that means the little body here is inside the body of the bigger candle. Okay, they call that a bullish harami. Now, do they work 100% of the time? Absolutely not. Doesn't matter. We don't care. All we want to do is if it does go back up, we want to be in the trade. Okay, so I'm going to say over here, bullish bounce. We're going to define this too. Okay, a close above the high of the low day. Okay, that's how we define a bounce. Now, this has some interesting nuances to it. Apologize for coughing in your face there. So, what day is the low day? Well, and some technicians define this a little bit differently, but the low day for me is the lowest low in the pullback. So, like yesterday, here in this case, the 12th of May, that was the low day on Qualcomm. This is what's called an inside day. It has a higher low, but a lower high. So, it's inside the price action from the day before. And we call that an inside day. In this case, where the body of that candle's inside the body of the previous day, we also call that a harami candle. And a harami candle in a pullback generally going to be a bullish harami. So we went in there and said, okay, if this starts to trade above the high of this harami candle, the inside day, then I want to buy this stock. That's what we'd said. Okay, now the high of that day was 219.49. Now I'm going to write this over here in the notes as well. Entry signal. Okay, now you guys have to decide here for yourself what your personal entry signal is. And let me tell you a secret. Come in close here. There's no perfect entry signal. Damn, I wish somebody pounded that into my head when I first started. I thought, well, if there's an entry signal, if there's two green arrows, or if there's a bounce off support on an uptrend, that's got to be a profitable trade. And that's not true. Okay. There's a lot of good entry signals. You just need to pick one that works for you that you can identify. And so in our example, I think we just went like 20 cents above the high of that candle. So our entry on that day was at 219.69. Okay. But you have to decide. Okay. You decide. And we put that order on. And it's called a buy stop order. And we're going to try to get 3 of these examples in. So I'm going to speed up here a little bit. Okay, so the next day, if I move my chart forward, now this is a really great exercise. You can do this on any of your stocks. You can go zoom in on anywhere on a previous chart and then peg it up against the right side of your screen and just ask yourself, okay, what would have to happen tomorrow for me to buy that stock? Well, we already know the answer. It has to trade above 219.69. You have to decide if that's during the morning, during the afternoon, or later in the day. Some traders will wait till that last 30 minutes of the day to confirm a bounce or to confirm that hold or confirm that close above the high of the low day. Some traders will say, you know what, I'm trying to catch this big white candle, the big bounce off support, and I'm just going to get in the morning or whenever that happens. I want in as quickly as possible, right? So, we can catch a big green candle or we could get faked out and then the stock goes back down by the end of the day, okay? So we want to be aware of those different things. Okay, Barbara says, do you like the hold or above a bullish harami for the entry? This is a great question that Barbara's asking. The close above the high of the low day, this is actually the low day, isn't it, Barbara? Great eye. In fact, I've drawn a little gray box there. So some traders, yes, they would say, you know what? I'm not going to get in unless it goes above the high of the low day right here, right? Their entry signal would be somewhere above that. Other traders, and what we did in our example, Barbara, is we went above the high of that bullish harami, even though that wasn't the low day. And so again, you'll have to decide on your entry signal, do you want to go above the high of the low day or above the high of that inside day? And there isn't really a right or wrong answer. There's obviously an advantage if we go above the Harami, we're getting in around 220 versus up here around 230, right? So that's a $10 earlier entry. But we might also get a little more of a fake out there, right? So there isn't a right or wrong. I've done both of these for a long time, many times, and some traders like using that lower entry price, especially when they have the criteria they're looking for, that uptrending stock, it's above a moving average. It is making those higher highs and higher lows. Okay, so that's a great question. Thanks for that. All right. So we set that order up here. We move the chart forward and we ask ourselves, did our order get filled? So did our order get filled there, Barbara? If I had an entry trigger price that said, hey, Mr. Broker, if that trades above 219.69 anytime during the day tomorrow, buy it. And what would happen? The answer was nothing. That order, done. It didn't fill. So now what we do is we go back through our checklist, right? So do we still have a bull flag setup? Well, we have the higher high. Now we've got a 1, 2, 3 day pullback. Oh, wow. We're getting kind of closer in here to our typical pullback. Where's my low day? Well, the low this candle here was at 202. The low on this far right candle is at 199. So which one's lower? Well, this is now my low day. So let's move this over. Okay. So there's my new low day. Okay, and we're good with that. And what we're checking is are we near support? Well, again, we had some old resistance about 187. We're closer to support than we were. That's close enough. If we did a Fibonacci retracement on this last little short-term move, looks like we're about maybe the 50% retracement level, somewhere in that neighborhood. So I don't know, and I don't really care if this is support. I just know that we're getting close enough to it. So I'm thinking, yeah, maybe I'm going to set up my buy stop order. I'm going to be ready to take action if and when it trades above the high of that low candle. Okay. That low candle's at 209.53. So if we follow the same rule set, now we're lowering our entry price to 209.73. Now, why 20 cents? Nothing special about 20 cents. It's just one of the things that I learned when I started. I learned 25 cents. I learned 10 cents. I heard of 1 penny, which for me is a little too close. But the idea here is it's 20 cents above the high of that low day, not 20 cents above the close. I mean, it closed way down here at 200. We got to get a $9 push to get before that order is going to fill, right? So anyway, we have our checklist. So what do we do? Now, this is another little mantra that we have, at least that technical traders will sometimes use, is see the setup, place the buy stop order. That's just, they see the setup, it's valid, they have their uptrending stock, it's on a stock that they're willing to invest in. They realize that they might get faked in and it might be a losing trade. But the point is they identify the setup and they're getting ready. They're getting ready to take action here rather than looking at a stock and thinking, I wish I bought that last week or 2 weeks ago or what, that breakout. So this is just helping us get ready to take action. All right, so now we have a new entry at 209.73. We have a new low day. It's still a higher low. We still have a great looking short-term bull flag. And we actually did this. I did this in class. Our order that I placed in class didn't fill. So I just kept placing this order until it filled. Okay. Next day, did our order fill? Okay, so again, our entry price was at 209.73. The high the next day was 207.40. So did our order fill? Answer no. Okay, the low this day here, this is now on the 15th. Let me change my drawing set to that arrow again so it's a little easier to see. Okay, we have a new low day. That low's at 119.9 or 199.16. This low was at 199.66. So now we have a new low day. So we'll just move that over. That's a new low day. And do we still have a setup? Well, higher high. Do we have a higher high in our trend still? Check. That's over here. Okay. 3 to 5 day pullback. 1, 2, 3, 4 day pullback at this point. Are we near support? Do we have a bullish candle pattern? Well, we might look at that again as another Harami. The body's inside that body. That that's called a doji when the open and close are pretty close together like that. Looks like a little plus sign. Um, we might look at that as an inverted hammer, I guess. It has a little bit more shadow there at the bottom than I would like to call it that. So I just call this a little doji candle, and it happens to be inside the body there. So I'm thinking, yeah, we're pretty close to support. And most important for this type of setup is this low still higher than my last low in the trend. Okay. And now Barb's making another observation here. Barbara Hicks, great job. We have a red arrow on our moving on the MACD. So this is no longer a valid two green arrow setup. Okay. Or let's say it's not a two green arrow buy signal. Now, ironically, it was a two green arrow buy signal all the way down. You see that the MACD was green. So one of the things as you decide on your entry signal is we have been using this two green arrow entry signal for almost a year now. We've talked about this bounce entry a couple of times, but one of the things that's very common is when the stock pulls back like this, the MACD, a kind of momentum indicator, will also go down. And oftentimes in the bull flag setup, we might have a red arrow on the MACD, or we might see the RSI going down over the last few days as the stock price has declined. So that shouldn't necessarily be a red flag, but Barbara's correct, is this is no longer a two green arrow buy signal. Okay, but it still works for our example. I went ahead and put another order in. I said 207.40 was the high. I put an entry signal at 204.760. And then the next day, this is what happened. The stock traded up to 210.80, 210.80, and then closed at 203.64. So we got bought in there at about 207.60. And then at the end of the day, guess what was happening? We were losing money. And when I first learned this, I thought, oh no, I did something wrong. Didn't do anything wrong. This is just a reality of kind of how trading works. Is it traded above the high of that low day? It triggered that buy stop order. And at the end of the day, I'm not only in the trade, but I'm losing money and I have a new low day. Okay. So some traders may have said, you know what? I'm going to wait till that last 30 minutes of the trading day before I trigger my order. And I'll show you how to do that in our example here today. But I do want to point out that this was a valid entry signal during the day. It got us in, and then like Barbara's saying here, we still have a red arrow on the MACD. So at that point, it wasn't a two green arrow trade anymore, but it did trigger that order. And if we had waited until the end of the day, we wouldn't be in the trade and we wouldn't be losing money. So you have to decide on your own entry signal. Do you want to go in anytime during the day and try to catch these big momentum candles? Or do you want to wait till the end of the day to avoid getting what I called suckered into the trade because it traded above but then slammed back down? Okay. Now, in our case, we were already in the trade. The next day, the stock was down again and a new low day. So in this particular case, if we had waited till the end of the day and then put a new order on the next day here, we could have said, you know what, I'm going to get in there at 201.70. And then this day we would have been in there, it went up to 203.659. So in this particular example, we would have been better off to wait till the end of the day and get in there toward the end of the day rather than, intraday anytime. But I just wanted to walk through that because we actually got into this trade. Let me show you where we are today. Okay. The stock had a really nice bounce, went up and made another new high in the trend. Intraday high a couple days ago, kind of choppy here a couple days, and now we've had a pretty strong move again today. But we're already in this trade on Qualcomm. I just wanted to walk through that because we're going to take a look at some examples on some stocks. Now, before I go to those examples, let me show you in the top of the chat, and also it will be in the description of this webcast. I created another scan. Well, I didn't create it. I borrowed it from a colleague, but it's a really cool bull flag scan. How would you like to be able to find these types of setups just, running a scan so you don't have to watch through so many stocks? So here it is. Let me uh, again, Barb, maybe if you can go up to the top of the chat there and grab that scan. It's called a bull flag scan. It's really pretty cool. It's very simple. What it does is it looks for here's the criteria. Um, so basically, what this is looking for is something above a 50-day moving average, above a 20-period moving average, and then it's looking for something below a 5-period moving average. I don't know why that came up that way. Oh, that's the volume. Here it is. So what this is doing, it's looking for an uptrending stock, so above a 50-period moving average, up above a 20-period moving average, but it's below a 5-period moving average. So over the last 5 days or so, usually that's going to indicate a pullback. So it's a really simple scan, but it's a really useful one. And some stocks came up here. I don't want to run the scan again. Sometimes after hours they don't work, but here's some stocks for homework. We're going to look at Adobe and GE today. Okay. And then if we have time, we'll look at a third one. All right. But here's that. We can run the scan. Of course, you run the scan. We're looking in the S&P 100, which is where we've been kind of focusing our efforts in our two green arrow system. And so these are stocks that meet those criteria. Now again, Barbara Hicks and everybody else, they may not meet the two green arrows scenario, but we'll see. Okay, the actually ones I picked do. But let's take a look. Let's go look at Adobe first. So I'm going to put in Adobe here, ADBE. And I drew in a resistance line. Now, resistance are areas. And so this stock has been getting beaten to death over the last little while. Went down to 224, started to consolidate a little bit. We had some resistance there. It broke that resistance here, in my opinion, with a close above resistance on the 29th. And what we're doing now is let's identify our highs and lows and just go through the checklist, and then we'll put an order on this one. Okay. So first checklist item, high or high. So all we're doing is trying to find the current high. Okay. I'm going to draw a little rectangle on that. And we want to compare that to the last high. Okay. Which I would say is here. Okay. So do we have a higher high in this trend? Okay. You guys help me out. Okay. If the last high was up there, I'll call it at 265 and the high 3 days ago was 275. We take out our abacus. We do some calculations here. 275, subtract the 0, divide by 10. Oh, yeah, that's higher, right? Okay. So checklist number 1. Got it. Okay. What's next? 3 to 5 day pullback. Well, 2 day pullback. We're looking on a 2 day pullback right now. Now, again, these are pretty big pullback days, right? You know, we gapped down here and then closed lower. We gapped down here and traded lower. And so, you know, again, sometimes we don't get a 3 to 5 day pullback. Sometimes we'll get a 2 day pullback. In a really strong trend, and these are kind of frustrating, we'll get a 1 day pullback. You guys ever seen that where you're like, I know this bull flag stuff, and there's a red candle. I'm getting excited. Next day it's going to pull back. I'm getting ready to buy that, and then it bam, takes off like a rocket again. So sometimes we only get a 1 day pullback, and then it's not really a flag, in my opinion. It's just kind of a little pause in its run, right? But 3 to 5 days. Well, 2 to 5 days, that works for me as well. Are we near support? Well, again, this is eye of the beholder stuff, but it looks like our old resistance, which may become new support, not always, but it looks like we're certainly trading near support. What kind of candle pattern is that? Now, it's probably not perfect, but we got a smaller body up here with a long shadow at the bottom. We call that a hammer. Okay, and it's trying to pound out a bottom. We don't know if that's going to be the case or not. We don't really care. And then all we have to do now is say, do we have a higher low in the trend? Well, this is our current low, and there's my last low. And again, just visually, do I have a higher low in the trend? And the answer is yes. Now, Barbara, for you and anybody else that's been here forever, you know, we still have two green arrows. The moving average actually is higher today than it was yesterday. Yesterday it was at 245.29. Today is at 245.46. So it's still actually higher. So even today, this meets our two green arrow buy signals, and we could buy this today, right now at the closing price, put an order in. But to illustrate this buy stop idea, I want to go through the mechanics here of placing this order. All right. So today's high is at 260. So again, I'll put the numbers over here, but you guys again will have to decide on your own entry rules. This is just for an example, but our entry is going to be just 20 cents above that high, 260.20. All right. Now, again, we're still trying to do an investment here. We're just using a short-term trader's entry trigger, this bull flag setup, to get into a longer term trade. I don't know how long this trend will last. I hope Adobe goes up for 3 years. All right. And stays above that 50-day moving average. If that's the case, then based on our two green arrow rules, we'll be in this trade for 3 years. But what we'll do is we will use our original, stop plan, 1% below the low, below that moving average. So 243.01 is going to be our stop, 243.01. And we're going to probably be able to buy 2 shares of this because we invest about $500. All right, so let's do this. Okay, right click, buy custom with stop. We're going to shrink this down. It's 243.01. Let's remember that. So our entry trigger we said was 260.20. Not a limit order. That's going to be a stop order. And if we wanted to, we could make it a buy stop limit order. Okay, so you have to decide that as well. We'll just use a buy stop order. And then basically our job tomorrow morning is just to see if this is gapping over our entry significantly. If it's going to open at 265, this order is going to trigger, but it's not going to be filled at 260.20. It's going to be closer to that 265. So you have to decide if you want to spend more money on that. But we're just going to leave that as a buy stop market order. And it works just like a sell stop. It triggers at 260.20. We don't know. It could feel much higher than that if we're not careful. All right. We're going to set up our stop order just manually here. We said 243.01. And that's just 1% below the moving average. Make that good till cancel. We can go with 2 shares. We'll be right there about $500. Okay, confirm and send. And we're about 512, so a little bit high there, but we check our order buy 2 as a stop at 260.20. We're going to sell. That sell order becomes active once the buy fills. If it doesn't fill, the sell won't become active. And if it does fill the buy order, then our stop will be at 243.01. Again, no guarantee to get filled at 243.01. That'll just trigger an order, and it could gap below that or fill much lower than that price. And we'll put this in our two green arrow trade. Okay, we're going to send that off. Okay. Now, what if that order doesn't fill tomorrow? What's our job? Well, we just go through the setup criteria again. If tomorrow's candle is a little bit lower, we have to decide if that support level's been broken or not. Maybe we don't want to trade it in there. Okay. Tim says, how do you buy only in the last hour? Oh, okay. Let's go ahead and show that. Let me show that on the next example just so I can get through this other example. And we'll do that. All right. So this is GE. So GE, again, very similar type of setup here. The stock has been trending down. Kind of found a little bit of a base or bottoming pattern here. Broke out, made a short-term high or high. How do I know that? Well, there's our current high. Here's our last high. Here's our current low. And here's, oh, sorry, that was our last low. Here's our current low. Okay, so let's go to say it through the credit setup criteria again. Do we have a higher high in the trend? Yes. Okay, this high is higher than our last high. Do we have a 3 to 5 day pullback? Well, we have 2 days again. So, this may go down another day and we'll just move our order down. But, 3 to 5 days kind of ideal. 2 to 7 days is also common. Are we near support? Well, again, the old high was up there about 310. Today's low was at 311. That's pretty close, right? And are we making a higher low? Well, compared to our last short-term low in the trend, yes, we have a higher low right now. And so we have our setup. And then again, the little mantra I shared earlier, some traders will use is see the setup, place the trade. Now, that trade may not fill, and we don't really care if it fills or not. But if it fills, that's because the momentum has shifted back to the upside. Okay, so let's go through the mechanics again here. Now, this high at 319.55 is quite high above the close. I mean, that's $6 above. So ideally, I'd love to see this come back one more day. Like get a little hammer candle pattern or something closing closer to 310. But we may not get that, right? So, so we'll be there on that one. So let's go in here, 319.55. So we'll go 319.75 on this one. Okay, again, not a recommendation, just doing some practicing. 319, what was it? 75? Yeah. 319.75, 20 cents above that. Stop. Again, using our two green arrow stop rules, 294.12 is our stop. Do a right click, buy custom with stop. And we're going to probably just do the one share on this one. Okay. And 319.75 and 294.12. So this one, 319.75, that's going to be a buy stop, not a buy limit. Good till canceled. Our stop, we said, was 294 and change. 294.12. Good till canceled. And Tim said, how do we set that order up to trigger at the end of the day? So when you put your cursor on the green buy order at the far right there, you'll see a gear. Do you guys see that? Click that gear, and then this order rules window will come up. And right here it says submit order at, and today's the 3rd. So if we wanted to do this tomorrow, the 4th, after like the last hour, let's say the last hour. Now this is your local time here. So I'm mountain time. So this is at 1300 hours, which is 1 o'clock mountain time, but 3 p.m. Eastern. So this is how you'd set that order up to be during the last hour of the day. That way we avoid maybe some of that early morning volatility. If you wanted to do it in the morning after 10:30, you could put that in there. But just remember, that's your local time. And then click save. And then this is how your order looks. Buy one, as a stop at 319.75, and we're going to submit that after 1 p.m. Now, what's the disadvantage here? Well, if the stock trades above 319.75, let's say early in the morning, and at the end of the day it closes or getting up near 325, well, we miss out on a $6 move or $5 move, right? Because we got in at the end of the day. Now, the advantage, though, is like we saw in Qualcomm, this may trade up above 319.75, trigger the order, and then close down at 313.75 or something, and we're losing $6 a share. So just be aware of that. There's trade-offs on this entry of how it works. And then our stop order, 294.12, again, not guaranteed to get filled at the 294.12, could be filled much lower than that. We send that order off, and now we've got a working order here. And if it bounces, then we'll be in that trade. Okay. Does that help there, Tim? Great question. Thanks. Appreciate that. So in the last couple minutes here, CB says last week you said we could review some stops. Can we review stops on existing positions? Yes. So Starbucks, we actually got stopped out. So Starbucks was one that we had on our monitor tab, and you can see the symbol's not there. We got stopped out of this yesterday. So, and I don't remember where the stop was, but we got filled over here, and it came down, gave her the 2 red arrows. We adjusted the stop, and then we got stopped out here a couple days ago. All right, so that's on Starbucks. We have red arrows on COP right now. COP, we got the first 2 red arrow signal way back over here. And so we've had the stop kind of below this level of support for a long time. So on this one, CB, even though we've got, a new 2 red arrow signal right there, that's actually on the 26th of May. Because that support level hasn't changed, I did not adjust the stop on this one. Our stop on COP is at 111.08 right now. And that's just below kind of this current level of support. We had a red arrow on target earlier in the day, but I think it changed. Yeah. So we had a red arrow, 2 red arrow signal as of yesterday where we were below the moving average and the MACD was red. So there's a 2 red arrow signal here, but we got some red arrows back in there. And again, that kind of formed that support level on this. And so usually when the stock's bouncing around like that and we have not really started to trend back up again, I don't really adjust the stop in this 2 green arrow plan. And that stop on target still at 114.13. Now you'll see today we actually closed back above the moving average. So it's not 2 red arrows anymore. But again, I'm not going to be moving that stop until the trend resumes really. Okay. Then we had one, or actually two other ones that had red arrows today. BKR is one that we bought not too long ago. BKR got two red arrows over here, went back above the moving average, and looks like it may have closed above here. So we do have a little bit higher level of support at 62.46 right now. I still have our stop below this old level of support here. Again, I'm pretty picky. I hate getting stopped out of stuff. One of the advantages of position sizing your trades effectively is, you know, I'm just not in a panic to move my stop up here. I've position sized appropriately for our sample account, and I could move the stop up. In hindsight, yeah, I wish I got out here at 70.40. It just that wasn't part of the plan, right? So, as that works there, that's kind of how you decide. And then the last one we had was WMB. This one does have red arrows, and we have a stop on this one at 68.89, which is kind of based on some of this previous price action. We went back up today a little bit, but that trend isn't real strong. We've made a lower low short term, and so we may not get there. All right. And then last question here, real quick, Scott. Do when we move stops up two red arrows? Yeah, basically two red arrows is when we move the stop up is the signal to do that. So you know look through your open positions. If there's a new two red arrow signal, then you can go through that process that we've done many times in our webcast. All right. Well, hopefully that was helpful for you today, everybody. That we placed the two orders and go through your process and come back and see me next week. Thanks, everybody.